This week the RBA released the minutes of their April meeting. Now, although over the last couple of months they've taken the market by surprise by keeping the cash rate on hold, their commentary suggests that there's still room for further rate cuts. Let's take a look at these comments from the RBA. Further easing of policy may be appropriate over the period ahead to foster sustainable growth in demand and inflation consistent with the target. By further easing, the RBA is clearly suggesting there could be further interest rate drops to come. Then they go on to say this. The board saw advantages in receiving more data, including on inflation, to assess whether or not the economy was on the previously forecast path and allowing more time for the economy to respond to the reduction in cash rate earlier in the year. So effectively what the RBA is saying is that they're happy to keep the cash rate on hold for now and wait for further data to come in so that they can assess the whole situation. Sydney and Melbourne, the two strongest property markets in the country, they also made a mention in the minutes. Take a look at these comments. Members remained alert to the possibility that the low levels of interest rates could foster imbalances in the housing market. Although prices continued to rise rapidly in Sydney and, to a lesser extent, Melbourne, trends elsewhere were more varied. So the full impact of an interest rate drop does take time for it to filter through the economy, and this is why the RBA has stayed on hold for the last couple of months. They're waiting for more data to come in to see exactly what impact it has had and whether they need to move further. But this week, inflation figures also came out, with CPI coming in at 1.3%. Now, as we know, the RBA, their target is somewhere between 2 and 3%. That's where they'd like to see it. But with the inflation at 1.3%, that's just going to leave the door open for further rate cuts. I'm Iggy Damiani. I'll see you next week.